have come out, so that as well will reflect into some of the stocks like Bharat Forge, etc. But let's get a quick handle on the IT sector. Kumar Rakesh, who's the Vice President Equity Research at BNP Paribas, joining in. And in the month of May, they released a report which said that the deal wins remained very robust in the March quarter, and accelerated bookings growth is something that's a very positive sign for demand. They're seeing an increasing number of cost efficiency and vendor consolidation deals. Kumar, thanks a lot for joining in. Can you just explain to us what this means for the stocks? Because there is definitely valuation headroom, right, given the kind of fall that we've seen in the recent past. What kind of upsides do you see in the stocks, and what is the, the scenario indicating now?
Good morning, Sonia. Pleasure to be on the show. So this is quite an exhaustive work which we do every quarter, going through about 26, 27 global IT services companies, which collectively is about $300 billion of annualized sales. That's quite an exhaustive company set which we go through their entire revenue performance, margin, deal win, and even the commentary. And we try to tabulate what kind of momentum the industry is likely to see in the coming quarters. Now, almost all the companies have been talking about and highlighting that the revenue is slowing down. The growth is coming down in the recent quarters, and there is definitely some headwind in the immediate near term as well. But what is standing out in our analysis is that the deal win by the companies globally continues to be pretty robust. Actually, it accelerated in the month of March. In December quarter, it was up by about 8% on a YOY basis. In March, it was up by about 11% on a YOY basis. What it tells us is that while the deals are being signed, the ramp up has been much slower, as the customers are trying to gauge how the macroeconomic environment is going to play out in the coming quarters. And as they start getting far more comfortable with that, many of these deals will start seeing swift recovery. So essentially what that implies is that there is a setting pent-up demand in the system possibly. And hence, as we move towards September quarter, when the macroeconomic headwind will largely get addressed or a better visibility will be there, many of these deals will start seeing a swift ramp up and possibly will start contributing into revenue as well. And that is what we are expecting, that the second half of this fiscal year for IT services companies could potentially see much stronger growth as these strong deals start contributing into revenue.
So, sorry, just one follow-up here. Is this stronger growth something that just the large cap, the tier 1 IT companies will see? Or are you looking at both valuation and headroom growth for the mid-cap companies as well? I ask because some of them are in specialized areas, right? Like something like a KPIT Technology or even a Tata Elxsi. How are those stacked up?
So over the last couple of years since the COVID recovery, what we had seen that the mid-cap IT services companies were significantly outperforming the large-cap IT services companies. And one of the key reasons for that was that the accelerated digital adoption that happened across enterprises. They were rolling out multiple digital projects, but they were smaller in size because they also were experimenting with new strategy on the digital front. And since they were smaller in size, even small and mid-cap IT services companies could bid for that and win that. And hence the addressable deal pool for the mid-cap IT services companies had dramatically increased during that phase. And hence the growth outperformance and the stock outperformance as well. Going forward, we expect that divergence to start narrowing, which we have already seen to a large extent. And the growth of mid-cap IT services companies versus the large-cap IT services companies should not be as large as it used to be earlier. And add to the point which you were earlier talking about the valuation part, the large-cap IT services companies have significant more headroom on the valuation front. That should also imply that the stock performance of these two segments should not be dramatically different.
Okay. Since that's the view on mid-cap IT, let's now move to the large-cap IT players as well. The IT index, right, has already rallied about 2.5 to 3% in the last 1 month. Do you think a lot of the good news that you spoke about, the strong deal wins, the improving environment, etc., do you think a lot of that is in the price, or is there more headroom for the large-cap IT names as well?
So yeah, if you see over the last 1.5 years, investors, both domestically and foreign institutional investors, have significantly reduced their weight in or exposure to the IT sector in India. And now both of them are sitting significantly underweight. And as they keep getting more comfortable with the US macroeconomy not being as worse as it was expected a couple of months back, we expect that to keep reversing in the coming months. And hence there is significant headroom for investors to keep building their position up into the IT sector, and that should keep driving the stock performance in the coming months. I would not expect that the large part of the recovery is already priced into the stock price.
All right, we'll let you go on that note. Thanks a lot for